The Payroll Tax Reduction Plans offered through PTE Group Inc. are a proven, statutory financial strategy for corporate leadership designed to benefit the entire company, employees, and employer. To be clear, this is not a tax credit. It is not a government grant. It is not a retroactive refund claim, and it is not an aggressive tax position. Rather, it is the predictable result of proper payroll and benefit design operating within a statutory framework that Congress has written into the law to promote health care, medical care, and preventative care for all. And it is designed to significantly lower employer FICA payroll taxes while simultaneously increasing employee take-home pay and expanding health benefits, all at zero net cost to both your company and your workforce. We believe every company with W-2 workers should evaluate this opportunity, which is why we wrote a book on this industry, The Magic of Payroll Tax Efficiency. Find it on Amazon soon, or go to our plan website at ptegroupinc.net and click the book cover. We begin with a quick summary. 1. Participating employers realize an average net savings of $700 to $1,000 per employee per year in reduced FICA payroll taxes. 2. There is zero disruption to your existing benefit plans. This program sits seamlessly on top of your current major medical health plan without replacing, modifying, or altering your existing coverage. 3. Payroll integration is fully automated, placing minimal burden on your HR and payroll staff. 4. It operates at no net cost to either the employer or the employee. 5. We have a large following of companies and independent consultants alike. As corporate executives, you are trained to distrust financial claims that sound too good to be true. And in most areas of business, that skepticism is the correct instinct. But not today. The right question is not, why haven't I heard about this before? Is this real? Can this really save money? The arithmetic is straightforward. The right question is the program structured properly, documented properly, administered properly, and independently reviewed? Most executives treat payroll taxes like gravity, fixed, unavoidable, paid, and forgotten. But every payroll cycle that passes without evaluation is another payroll cycle your competitors have taken to save on their FICA taxes. Tax-advantaged wellness programs are legally structured to be compliant with all appropriate laws and regulations, and Congress made a special point to add preventative care to the ACA in 2020. We start with established federal policy. Under the Affordable Care Act, Congress expanded workplace wellness incentives specifically to curb rising federal health care spending through preventive care. Congress recognizes standardized medical billing codes and a tax-advantaged framework that encourages employers to implement wellness initiatives. The congressional mandate is to cut healthcare costs through prevention, so employees lead a healthier and longer life. At PTE, we represent companies that use these regulatory foundations and established insurance frameworks to deliver compliant, tax-free health and wellness benefits, turning federal compliance into measurable bottom-line profit for your business. The engine of the plan we are describing in this video relies on official American Medical Association CPT codes. What is a CPT code? These are the same medical billing codes used by every doctor, clinic, and hospital in America. Here is how it creates tax-free benefits. 1. An employee participates in a qualified wellness activity such as biometric screening, blood work, DNA screening, facial biometric screening, health risk assessment, or education module. 2. An official AMA CPT code validates that activity as legitimate health care. 3. A licensed insurance carrier pays a claim benefit based on that CPT code. 4. The IRS recognizes this payment as a tax-free medical reimbursement under tax code regulations. Congress defines taxable wages by inclusion and exclusion under IRC 3121A5G. When qualified benefit elections lower the taxable wage base, employer FICA obligations drop automatically. This is not creative interpretation. It is arithmetic applied to statute. Here is how employer net savings are generated month after month. In this example, the employee has a monthly pre-tax insurance premium of $1,500 a month. The employer FICA tax is 7.65%, which is $114.75. Under this program, there is $35 per month third-party administrative fee for the plan. The net savings to the employer for this employee is $79.75 per month, and it will be $957 for the entire year. Not all employees will have the same pre-tax insurance premium. Premium levels are carefully calculated so that there is never a negative impact on an employee's paycheck. Let's walk through the 5 simple steps that explain how a qualified payroll tax reduction plan works. In this example, we are using an employee earning $4,000 per month. Step 1. A pre-tax deduction of $1,500 is deducted from the employee's paycheck through an IRS Section 125 plan. This is routinely done with major medical programs. This plan is supplemental, sits on top of your major medical, and as your accountant knows, a company can have multiple Section 125 programs. Step 2. This deduction pays for a comprehensive package of preventive health and wellness benefits and much more. Step 3. The pre-tax deduction lowers the employee's taxable wages from $4,000 down to $2,500, creating immediate payroll tax savings for both the employer and employee. Step 4. The employee completes routine monthly health, wellness, and preventative care activities tied to medical CPT codes. Step 5. Upon completing their activity, the employee receives a tax-free health claim payment of $1,200 in their paycheck. Our paycheck example is for an employee earning $50,000 a year in a state that has no state income tax, like Florida, with no other deductions like alimony or a retirement account to impact their pay. An employee earning $50,000 per year earns $4,166 per month. Calculating tax withholding, $853 is deducted from wages and the employee takes home $3,179 per month. Under a tax-advantaged wellness plan, after the employee takes their $1,500 pre-tax deduction, taxable gross income drops to $2,666. $457 is deducted for employee tax withholding. Because they have participated in plan activities, a $1,200 tax-free medical claim reimbursement is added back to the employee's paycheck. We can see from the table their final take-home pay actually increases. In this example, the employee's take-home pay increases by $64 per month. The plan is a true win-win. Employees never have a negative impact on their net take-home pay and often get a small increase in pay, while their employer captures substantial payroll tax savings. And hopefully, the employee makes improvements in their lifestyle that results in them living a healthier, longer life, as Congress intended. In addition to the tax savings, this program delivers a robust suite of comprehensive healthcare benefits that employees genuinely use and appreciate. Employees have a fixed indemnity insurance policy that includes cash payments when they stay overnight in a hospital, are involved in an accident, have surgery, or use an anesthesiologist. Our intent is improving employee health while lowering overall medical expenses, both short-term and long-term, as Congress intended. Telemedicine is a major centerpiece of the health benefit suite, providing 24/7 virtual primary care, urgent care, and behavioral health for employees and their covered dependents. Employees can skip crowded waiting rooms and connect with board-certified physicians instantly from anywhere in the country. It covers common physical conditions such as cold, flu, sinus issues, and allergies, as well as mental health support for stress, anxiety, and depression. The ability to talk with a doctor anytime about any problem is a major step towards managing one's personal health care. Mental health concerns are often ignored by employees because of privacy issues. With our Telemental Health program, privacy is guaranteed and our plan members get the treatment they need and deserve. Same-day prescriptions are available from our doctors and are sent directly to employees' preferred pharmacy with zero copays and zero deductibles for telemedicine visits. And again, this supplements your existing health plan with zero disruptions. Supporting total employee well-being, the plan includes specialized life coaching and personal development. These services are provided by nationally board-certified health and wellness coaches. Participating employees receive up to 6 one-on-one sessions per year with a certified health and wellness coach to focus on personal development, stress management, career growth, interpersonal relationships, and work-life balance, empowering your employees both inside and outside the workplace. All plan benefits are easily accessible through our user-friendly mobile app. The app acts as an active wellness partner. It monitors participation and automatically delivers personalized preventive care education and health information tailored to each employee's specific health profile. Employees can manage their wellness activities, request 24/7 telemedicine consultations, and access the no copay prescription program, and have access to a wellness library to research their particular wellness concerns. The plan formulary includes nearly 1,200 of the most commonly prescribed generic medications in the nation, available at zero copay, providing immediate out-of-pocket relief on everyday prescriptions. Compliance and legal protection are paramount. Every major employment and healthcare law is addressed. Our payroll tax reduction plans strictly comply with all major federal employment and healthcare statutes, including the Employee Retirement Income Security Act, HIPAA, the Affordable Care Act, and Department of Labor guidelines. From a tax perspective, the plans adhere to IRS Code Sections 125, 213D, 106A, and 105B. The plans are supported by published IRS revenue rulings and formal legal opinion letters, and backed by top A-rated insurance carriers. Our plans will not burden your HR departments. Implementing a new program might sound complex, but the third-party administrator handles nearly all the heavy lifting. Most organizations miss the opportunity to find out how easily implemented and how minimal the HR burden is because of the program's design. The program sits at the intersection of 3 separate professional disciplines within your organization. 1. Payroll tax mechanics. 2. Employee benefit design. And 3. Health and wellness structure. And most company advisors only work within one primary discipline. PTE brings all 3 of these departments together into a single, turnkey solution for you. We work directly with your HR and payroll teams for a seamless setup. Our third-party administrative team educates your employees on their new benefits and increased take-home pay. The TPA's administrative staff manages ongoing employee questions, additions, and claims. Plus, plan software seamlessly integrates with all major payroll systems, including ADP, Paychecks, Gusto, and QuickBooks, generating clear payroll reports every pay period. Getting started follows a simple 6-stage process. Stage 1 is initial paperwork. Stage 2 is providing a preliminary payroll census. In Stage 3, PTE prepares a detailed savings analysis report at no cost and with no obligation, showing exact employer tax savings and employee take-home pay gains. In Stage 4, upon employer approval, contracts are finalized. Stages 5 and 6 initiate payroll dry runs, onboarding, and employee communications. You can estimate your own payroll premium savings on our payroll tax reduction website, found at ptegroupinc.net. Here is an example of what this looks like for a company with 418 eligible employees. As you see in this example, $351,138 in FICA savings is generated, added directly to the bottom line. That added profit can also increase the company's enterprise value if the business is ever offered for sale. For example, an additional $350,000 in annual profit, valued at 5 times earnings, could translate into an increased offer by $1.75 million with the plan in place. In some states, workers' compensation will result in additional premium savings for the company. Where states calculate gross payroll after taking Section 125 pre-tax contributions, the savings can be substantial. Our team will evaluate during your census review. 2 states we can share with you today. California is a yes to workers' compensation premium savings, not taxes. Florida is a no. Similarly, in certain eligible states, pre-tax deductions can lower the wage base used for state unemployment insurance taxes. This represents an additional secondary savings opportunity that we evaluate on a state-by-state basis during your custom payroll analysis. Unlocking these substantial payroll tax savings while upgrading your employee benefits package is simple. Contact PTE by phone or email to request your custom, no-obligation payroll savings analysis. Thank you for watching.